Good morning, everyone, and welcome to our panel, Investing in the Future. We have a great panel of experts with me this morning and a good discussion coming. So let me start with a quick introduction of the panel, starting with the furthest left on the panel with Marcus Frampton, Chief Investment Officer, Alaska Permanent Fund Corporation. Next to him is Nick Thompson, Head of Private Assets with Schroders North America. Next to him is Kathy Woolams, Senior Vice President and Chief Sustainability Officer with Berkshire Hathaway Energy. Next to Kathy is Michael Sachs, Managing Director, Goldman Sachs. And to my left is Frank O'Sullivan, Managing Director with S2G Ventures. So this is our panel today. Before diving into the topic, I will ask each of our panel members to really take just a few sentences, explain who they are, their organization, and more importantly, what is the high-level involvement in the energy space. So let's start with you.
Thank you, Mackie, and good morning, everyone. So my name is Frank O'Sullivan. I'm Managing Director for Clean Energy at S2G Ventures. And we are a broad sustainability investing platform based in Chicago, investing across food and agriculture, water, and clean energy. We invest across the spectrum from early stage venture right the way through to real assets. And our clean energy activity is really focused at kind of the growth equity phase of our stage of the business, and in particular on opportunities that we see opening up now over the next 5 to 10 years related to energy transition, a broadening in the development and deployment of clean electricity generation, and the delivery of those clean electrons into transport, industrial processes, and the built environment.
Thank you, Frank. To you, Michael.
Thanks, Mackie. My name is Michael Sachs. I'm a managing director at Goldman in New York in the Natural Resources Group. I'm on the advisory side or corporate finance side, working alongside advising numerous public and private companies within the energy space. I'm a legacy oil and gas banker working in the refining and midstream sectors, and then more recently leading the LNG efforts along with hydrogen, carbon capture, and a lot of the other energy transition sectors going forward. We work across the M&A spectrum and then also the capital markets, both on the public and private side, helping fund the capital that all these developers need in the future.
Good morning. My name is Kathy Woolams. I'm Chief Sustainability Officer with Berkshire Hathaway Energy. Berkshire Hathaway Energy has energy in its name and sustainability in its vision. Our vision is to be the best energy company in serving our customers while developing sustainable energy solutions. We operate under a set of 6 core principles. All our businesses do, regardless of where they are in the organization. That includes customer service, employee commitment, environmental respect, regulatory integrity, operational excellence, and financial strength. We have regulated utilities, gas transmission, an LNG facility, and a non-regulated entity, BHE Renewables. And I will stop there and pass it along to my next panelist.
Thank you. Good morning, everyone. Thank you to Governor Dunleavy and his team for what's been a wonderful conference so far. Amazing content. I'm honored and humbled to be part of that content, and we're obviously honored to be a sponsor of the event. I work with Schroders. Schroders is a global asset manager based in London. We have $800 million of assets invested in many things around the world. Within our public equity business, we invest in energy transition, we invest in fossil fuels, we invest in strategies that are kind of hybrids of both. So we're really thinking about how energy transition is creating alpha opportunities from a public equity perspective. My particular role as the head of private assets for North America is within Schroders Capital. Schroders Capital is the $85 billion private assets arm of Schroders, where from an energy perspective, we're focused on renewables. So we have about $11 billion of assets on the ground across the UK and Europe, about 5.5 gigawatts of power generation. We were one of the early investors in wind power in the UK, and we're building that platform in North America. We have about $500 million of assets in Texas and Illinois, mostly in wind, and we're looking at, how do we help to develop the energy infrastructure around renewables in North America, which is, quite a large undertaking, and I'm sure everyone on this panel would share. So I'm excited to share our thoughts.
Marcus?
Yeah, hi, I'm Marcus Frampton. I'm the CIO of the Alaska Permanent Fund. So we're just under $80 billion today. There's been a lot of talk about ESG, and I just think it's really notable and cool to work at a fund that is one of the longest standing universal basic income programs that's around. And so every investment we make, benefits society and is just a real blueprint for what some other areas are trying to do in universal basic income, and we've been doing it for a few decades up here. We've been very active in energy even as other state investment funds have moved out. So in private equity, for example, we have about 10% of the portfolio in energy, mostly oil and gas, but also venture capital investments in emerging technologies. Everything we do, given our size, from a thematic standpoint, has to be an area where we can get substantial capital to work to move the needle, and then also be an area where we believe our downside's protected, where we won't lose capital on a binary outcome. And so that has led to substantial investments in renewables, multi-billion dollar investments in oil and gas, in LNG projects, and mostly through managers, but then we also co-invest with the managers. So we've been very happy with how energy investments have turned out for us as we've kind of stayed in the area, even as some others have pulled back.
Thank you. So as we all know, the planet faces a climate challenge, and that is really fueling that discussion and necessity for really transitioning that energy transition, as panel members were mentioning, into a low-carbon economy. And that covers the full spectrum of energy, from the low end of the carbon to the higher hand of the carbon, where all of that will be involved in a successful transition. So let's start the discussion on the low end of the carbon intensity spectrum, where there is a lot going on when you think about solar, wind, storage. There was reference previously to smart grids, electric vehicles, and so on. So the first question I'd like to hear the panel members on is really their perspective on the opportunity on that end of the spectrum. Marcus, you were mentioning significant investment in the renewable space. You are an allocator also to managers. So really, what's your perspective when allocating or investing, and your perspective on the scale of the opportunity, which seems to keep growing?
Yeah, it's absolutely growing. I mean, I like to review the EIA data on energy usage across fuel types, and it's notable to me that in the last decade, natural gas was the largest growth area in terms of volume of energy consumption. And we all know as the emerging markets emerge, energy consumption goes up around the world. Global natural gas is a big investment theme that an allocator like the Permanent Fund can put money behind. Renewables is another area. We've leaned a little bit more into traditional versus long-term holdings in renewables because of some concern around interest rate risk. So our kind of like macro view is that inflation is going to stay high and rates may be higher over time than people expect. So on renewables, we've been backing managers that develop and then sell the lower cost capital for the long hold. And we really like that sweet spot of the couple year development phase in renewables. Like nuclear is an area that is surprising to me that how it's declined in the last decade. A lot of that's Japan. But we haven't seen big opportunities to invest in nuclear, but that's something I'm certainly watching. I'd be really interested if there are other opportunities in that area. And then the last area is materials. So if you look at the, analysis of the opportunity in copper or other minerals that are used and will be necessary for if the electrification targets are hit. I mean, that's an opportunity that jumps off the page where there's been underinvestment, and yet the output would need to 3x or 4x in many cases. So, today it's natural gas and renewables development. In the future, the areas I'm looking at are nuclear and, metals and mining if those opportunities come up.
Thank you. Based on our pre-panel discussion, Kathy, do you want to comment also and add on to this?
Yes, of course. So Marcus referenced the nuclear issue, and we are pursuing a nuclear project in Wyoming. That is the TerraPower project that will be sited at the location of a retiring coal facility. So when we look at investment opportunities, whether that's through our regulated utilities or our non-regulated side, we're really looking at where we can repurpose some of the existing infrastructure, and that's a perfect example. The TerraPower project is about 350 megawatts of nuclear, but then it has storage that's capable of holding about 5.5 hours of storage. So it's a really nice opportunity to load follow relative to backing up renewables. So you've got some base load there, you've got following capability, and you've got transmission there. So looking at the site of existing facilities, I think, is really important. Marcus also hit on minerals. We currently have about 350 megawatts of existing geothermal in the Salton Sea area of California. And we are doing a demonstration project right now to extract lithium from the heat-depleted geothermal brine. And so another nice combination there of, can we make something more out of our existing assets in a way that benefits everyone, not the least of which is also adding another about 350 megawatts of geothermal there. So certainly expanding renewables, we have about, I think it's 14,000 megawatts of carbon-free electricity currently. That represents about $37.4 billion in investment thus far. And through 2024, we're planning another $7.5 billion in investment. So that's wind, that's geothermal, that's solar, that's battery storage, that's pumped hydro storage. So really looking at all of the opportunities we can to continue to expand that non-carbon generation while at the same time kind of continuing to use until we have better options for long term, but continuing to use our existing fossil resources in ways that are more carbon friendly. And what we're finding in that regard is we're able to back down that generation, but keep it online so that it provides that sense of reliability that our communities need.
Thank you. Nick, anything to add?
Yeah, I think I'd love to pick up on a couple of points that Kathy made. One, I think one of the things that's important about sort of the low carbon options, wind and solar, is they become lower cost options now, right? They've come down the cost curve as technology has improved. So now, from a cost perspective, which is a very important element of energy security, certainly important to the residents of Alaska, you can generate renewable power with wind and solar and provide cheap electricity, right? And that's something that we couldn't do before. So I think that's one of the things that's really been interesting over the last few years. And I think when you look at globally, right, what has this meant? Well, it's allowed for energy security in places like Europe, where they're beholden to Russian gas, to be able to pivot to more renewables and be able to provide that type of cheap electricity or lower cost electricity through an infrastructure that somewhat exists. I think the other point I'd pick up on is on the nuclear side, both the commentaries, is that what everybody's looking for out of the renewable sector and the lower cost alternative, lower carbon alternatives, is the on-off switch, right? The proverbial on-off switch, right? How do we turn it off when we don't need it? How do we turn it back on when we need it? That's why nuclear becomes so interesting. But at the same time, right, the technology is just getting there where we'll be able to use it at scale in mass. And so one of the things that we talk a lot about is making the incremental changes that are necessary today with the technologies that are available to you, rather than wait for the magic bullet, silver bullet of technology to solve this problem in 7 to 10 years. But make those changes today incrementally where you can, including, right, using the fossil fuel resources that we have.
Thank you. Just before our panel, there was a question on ESG. Michael, there is a question when making these investments about measuring the performance from a sustainable point of view. So how do you really measure that? How do you hold yourself, responsible? You're looking at Kathy. Do you want to have her take the first cut at it?
He's seeking legal counsel.
I think it's something that a lot of people are continuing to evaluate and research right now in terms of how best to measure ESG across all the different verticals. And the definition continues to evolve. At Goldman, we have a dedicated team that works with a lot of our clients to understand what ESG is, how to measure it, how to look at the performance, and more importantly, what are the tools available to our clients that they could utilize to figure out how to message what they're doing. I think the evolving definition from even 4 years ago to today has changed dramatically. It used to be very easy to say this is all environmental, but then the social side picked up, the governance side picked up, and now it has to be all inclusive. And I think that's the key theme that people are looking at right now is not necessarily dollars spent or returns or emissions, but it's much more broad than that. And I think that continues to evolve, and I think people are still looking for what exactly that definition and what those measurables are.
Kathy?
Yeah, and I characterize ESG as a measurement tool and a label, frankly, that we're still wrestling with. But really what it's about is having a sustainable business. It's a business process of having the right environmental tools in place to manage your environmental responsibilities, as well as moving forward, those future responsibilities. Treating your people well, making sure you're a good steward in your community, partnering with your states and local governments, and then having the right governance principles in place to ensure that you have financial discipline, that you advance ethics and compliance in a way that is robust. And so that ESG label is something that I hesitate to use because it's all about sustainability, having a sustainable business, having sustainable communities, and moving forward in what ultimately will be a sustainable future.
Thank you. Any other comment before we move on, Marcus?
Sure. I believe our ESG responsibility is to maximize returns, to maximize benefit to Alaskans through the growth of the fund, but I have a more nuanced opinion over time. I mean, we had an investment in a direct investment in a developer of renewables and energy transition technologies like battery storage at grocery stores to release at peak demand. And when you invest in an area like that has wind behind the back, it just is helpful. Like that company I'm talking about, we were their first institutional investor. They had hiccups like many early stage companies do, and they had to do a tough debt refinancing at a tough time, and they got it done in an environment where an out-of-favor industry would not have gotten it done. And then we've exited that investment at a high return and sold to some investors that company's mission is really important, and they've got metrics that they have to hit as an organization. So I consider areas that are in favor from an ESG perspective just sectors that have wind at their back for broad capital markets. And so, for example, we're investing in renewables, and then we're selling to people that want to own them for decades. On the areas that, 2 years ago, oil and gas was considered untouchable by a lot of investors. So when we invested there, it's got to have real short duration and high yield from production. And so we just try to be aware of where the capital markets are, and the ESG definition changes all the time. And I like investing where wind's at our back, and so we end up in a lot of these areas. But my ESG mission is to grow the fund to support Alaskans.
Thanks, Marcus. Good perspective on a topic that creates a lot of discussion, but a good balance perspective. Let me move on to Frank and talk about the newer technologies beyond those that we've talked about. If you think about green ammonia, green hydrogen, carbon capture technologies, biofuels, there is a lot going on. There is a lot of ideas, projects. How meaningful, how real is really the opportunity on that outer edge? And equally important, is the money there? Are capital markets there, ready and supporting?
Yeah, it's a great question, McKay. So I think just stepping back, when we speak about energy, the energy transition, oftentimes people focus in on one particular technology paradigm or one solution. And in reality, energy and the energy system globally has evolved to have the right solution for the right context. So the right solution for the right context means this technology fits this market need, the economics, the willingness to pay for different characteristics, et cetera, et cetera. And so when we think about the next decade, 15 years or so, and this broader idea of transitioning existing paradigms to newer, perhaps lower emitting solutions, we have to think about the right solution for that context too, which means lots of different things in different places. Today, there are certainly some kind of topics that are receiving, I would say, there's a lot of effervescence around them, so certainly green hydrogen is one. I think it's better to say, or a more reasonable way to characterize the situation is that going forward, we are going to look to greater linkage between things like clean electricity and other sectors that have historically not been intertwined as much. And that opens up a whole host of tremendous opportunities for investors, for the environment, for stakeholders across the spectrum. Also opens up some challenges. One of the big challenges that exists today is that although we have a lot of the solutions technically available, there is a difficulty in creating the commercial models that allow them to be deployed and financed. So for example, Marcus, with his mandate, he has obviously a spectrum of capital to deploy, but he wants to deploy, as he said, a lot of capital into downside risk mitigated opportunities. And for a lot of investors looking at this next 15 years and some of these new technology solutions, what you're facing is uncertainty with respect to will it work? Is the downside there? Whether it's technical risk or market risk, will it work? And in order to make it work, we need to still deploy a huge amount of capital. And that, I think, is a real chicken and egg issue that the space is facing. Basically, where we see the need today is for a category of bridge capital that exists between some of this earlier stage venture concept, where a lot of money has been thrown at the problem, and the longer term deployers of essentially infrastructure capital. Somebody to come in and to create some sort of mezzanine project finance capital to take on some of that risk and to get paid for that risk. And it's beginning to emerge. I think it's going to be a new category in the capital markets over the next few years, because without it, there's only a mirage around this opportunity to transition. We need to be able to de-risk those technologies.
Thank you. Michael?
Yeah, I agree with everything that Frank said. I think as you think about the capital that's required to move this energy transition forward over the next 25 years, internally our research group came out earlier this year, and they expected to be what was a $1 trillion per annum investment amount to being $2, $3, or maybe even $4 trillion per annum from 2030 and beyond to get to 2050. That's a significant amount of capital. The private markets are going to be a part of that. There's no question about it. They need to be a part of it. But the public markets and the governments are going to also be a big part of this. I think the DOE has a program in place right now that they are working on the heels of the IRA. I think what's happened with the IRA in the United States cannot be denied in terms of what it means from a global perspective. We have investors from Europe, from the Middle East, from Asia, trying to figure out how do I deploy capital in the US today on the heels of the IRA and what that brings to the table. People are now able to underwrite tax credits that they could not do before August. And as you're listening to all the private investors up here and the downside risk, the IRA has moved that up in terms of the ability to underwrite. And I think that's extremely important and cannot be denied in terms of what that's going to unlock in terms of the private capital. But there's a significant amount of private capital that's going to be required in 2021. Just over $50 billion was raised for the venture capital type of capital that Frank mentioned. That's a small amount versus the $1 trillion that was deployed. And so when you think about the amount that needs to be deployed over the next 25 years, I think the mezz capital, the project capital, is going to be a major consideration to get all this stuff built, because the infrastructure that's required is where the biggest part of this capital is needed. The development, the technology part, it's important, but it's a lot smaller than the actual infrastructure to connect it to the grids, to connect it to the world, and allow it to be a global solution.
And I want to expand on that just a little bit, because the policy levers that can be pulled are such a critical important of the capital deployment. And you typically don't think of those aspects together, even though mention was made of the IRA. But state policy levers, federal support, and us not working at odds with one another, but working collaboratively to get some of this capital unleashed. We had an experience recently where in the state of West Virginia, we needed to have a policy level change to be able to build a first of its kind microgrid to support a business, expanding business. And without that policy change, we could not have done that project. Great benefit for the community, great benefit for the state, but sometimes we have to step back and think about how we actually implement policies that unleash that capital.
Yeah, I think that's actually a great point. We tend to talk about the big picture of all of this, right? Net zero 2050. We talk about decarbonization, right? Talk about energy security as it relates to geopolitics. But there's a reality to this issue that impacts individual businesses. It impacts individual regions of Alaska, the electricity co-ops in the north versus the electricity co-ops in the south. All of them have different problems. And it's something that I've learned talking to people over the course of the last 2 days, is that there's a unique set of circumstances that every individual organization, whether it be a small business, whether it be a village, whether it be someone in West Virginia, a car dealership in Greeley, Colorado, they're all bringing a different sort of set of circumstances to this problem. And that's what makes it a challenge for all of us as investors who are looking for scalable projects, right? We're looking to deploy, very large 9-figure numbers into projects, and we're looking to make returns for, people like Marcus who partner with us. But the reality of these problems is really disparate and really fragmented. And so I think the caution is, again, right, we can't just wait for the big picture to evolve and the capital markets to become more favorable. We have to figure out how to solve some of these problems now, prove the concept, right? There's a lot of conversation about how Alaska could be a proving ground, prove the concepts, and then on the back of that proof of concept, you start to create the scalability.
Any closing comment on that topic, Marcus?
I don't have too much to add. My only observation, I think, would be that there's a lot of really interesting, potentially game-changing technologies out there, like fusion, and you could have a long list. 15 years ago, there was a different list. It was clean coal and cellulosic ethanol, and a lot of those didn't play out. But what really moved the needle was the cost of renewables coming down in the last 15 years. And so I mostly look at these big scalable opportunities, but then it's nice to also have a venture capital portfolio that's involved in the, science experiment is the wrong word, but some of them do play out, but it's definitely a portfolio that you need there, not a bet on a single new technology.
Thank you. So now I'd like to bring us back from the leading edge to today. Nick has mentioned energy security. And it's important to remember that energy transition is not going to happen overnight, and that there needs to be, for it to be successful, that energy security be managed. And so I'll turn first to Nick. Why? Because your group is quite present in Europe, and what we have seen after the beginning of the Ukraine-Russia war was an energy crisis because of a supply-demand imbalance, which was quite acute and was a reminder of that question of energy security. And then I will ask Michael to follow after Nick in terms of the role the U.S. Alaska can play in really that question of energy security. Nick.
Yesterday, one of the early speakers, and I think it might have been Rahm Emanuel, said, if Europe knew everything they knew now, would they have signed on for all the Russian gas that was running their energy, right? They probably wouldn't have. And I think that's sort of an important point as we think about energy security, is you have to think about sort of, right, the diversification of your sources of energy, right? You can't be beholden to one area of energy production, and certainly if that one area of energy production has some significant pinch points associated with it. And what you're seeing now in Europe, is a massive reaction to that, right? France had sort of scaled back their nuclear power production. Well, now they're thinking, can we turn that back on? Germany had scaled back coal. Are they thinking about, can we turn that back on? Do we need to turn that back on? In the UK, there's a significant movement to electrify the grid in a way that allows the electrification of everything else, right? 30 million new EVs by 2050, right? You're using heat pumps in local communities that are electric, not natural gas powered. So I think there's some massive, sea change things that are going to happen as a result of this, and they're not just where does sort of the energy come from, but it's also the consumption at the load point, right? Because if you can make things more electrified, which technology is allowing us to do, then you're going to benefit from not needing the natural gas in many different areas. And so I think it truly is a wake-up call, and again, this came out yesterday as we're talking about geopolitics, but really a wake-up call to the world that not only do we need to decarbonize because people have signed on to net zero, and there's certainly some climate issues related to carbon production, but we need to do it because there needs to be more security, right? I know that's something that Governor Dunleavy believes in very, very closely, is the citizens of Alaska and the electricity prices that they pay. Right? It's not about necessarily decarbonizing from the perspective of net zero. It's about being able to provide inexpensive electricity that works all the time. And you can turn it on, you can turn it off, and you can store it, and you can do all these things with it. So I really think what you've seen globally is a real wake-up call. And that wake-up call was happening slowly, but it was such an incendiary topic because you were on one side or the other around climate change and decarbonization. Well, now the wake-up call is reality, because you're looking at where does your energy come from and how quickly can that get cut off by some type of geopolitical issue, right? And that's real, and that's real time and right now. So I think at that point it's creating more demand for diversification of sources, which is then going to create that abundance of capital that's necessary to make those changes.
Yeah, I think I agree with everything that you mentioned in terms of what's happened in the world and what's changed in the last year and a half. And when you think about what we're all up here talking about, energy transition, there's no fuel that represents that more so than natural gas, and specifically liquefied natural gas for the world. What's happened in Europe and the energy security there, the energy security for a lot of our allies in Asia. You heard yesterday from Governor Dunleavy, Senator Sullivan, Ambassador Emanuel, Secretary Pyatt, Secretary Turk. They all had the same exact view in terms of the importance of energy security, which is pretty unique today to have people from both sides of the aisle have a true bipartisan view of what needs to happen for the world. And I think the U.S. is going to play and is currently playing a critical role in supplying LNG to our allies in Europe and continuing to supply our allies in Asia. And when you think about that and you take a step to what does that mean for Alaska? The Alaska LNG project provides an opportunity to source gas, conventional gas right now, and they will be the cleanest natural gas or liquefied natural gas from a U.S. supplying gas to our allies around the world. This project in Alaska would be a game changer not only for the state, but also for the geopolitical impacts in Asia and potentially elsewhere as well. And I think that's what's really important to take a step back and understand. When we're talking about energy transition, it's not the on-off switch that's going to happen tomorrow. It's going to take a lot of time. It's going to take 10, 15, 20 years. And LNG is the answer to allow us to get to that net zero 2050 target that everyone wants to hit. But you can't do it in 2 years. And the amount of capital that's required for this project, along with many others that are being developed in the Gulf Coast and elsewhere in the U.S., is significant. But it's also something that, in Europe, it's been a huge change, sea change in the last 18 months, where we're raising capital for projects, LNG projects, down in the Gulf Coast. And the European banks are saying we can't support that. We have to step back. It's fossil fuels. And then when everything happened with Russia and Ukraine, governments of Europe stepped in and were told their banks, you now have to go and support these projects because we need the natural gas to come here. And that's an example of the roles that the governments can play, whether it's federal or state governments, in terms of supporting these projects and using their tools that they have with the banks and their other firms around the world to support these extremely necessary projects to get us to where we all want to get to, but really lead that transition.
Thank you. There are many questions coming from the room, so I'd like to move to that. But Marcus, you've invested in LNG projects. You want to add a comment to Nick and Michael's comments?
I don't have too much to add. I mean, our private market energy activities are allocating to managers and then co-investing with those managers. LNG's been a huge theme among infrastructure managers and some of the most attractive return on capital projects. So I'd echo a lot of what was said there, but that's about all.
There is one question. I think Michael referred to the need for battery technologies, EV, on the mining side. And the question from the room is around that opportunity in Alaska to be able to begin developing that supply chain ahead of major projects coming in.
Yeah, is the question about the minerals of Alaska? Yeah, I mean, I think learning and speaking to everybody yesterday, and what you have here, reading through the sustainability report, there's no question that Alaska is the proving ground for the United States in terms of natural resources. There's an abundance of materials here that can be utilized. I think one of the things around Alaska LNG that we've talked about with the mining companies is being able to source natural gas to allow them to actually build up their industrial businesses here. That's something they potentially need to be able to harvest a lot of the minerals that are here and stop having the dependence that we currently have with many of the minerals with China and other countries. And so having that security, again, that independence for the country and being able to source the raw materials that are available here in Alaska is vitally important, not only for jobs and wealth and creation here, but also for national security, to be able to deploy that into the businesses of Teslas and GMs and Fords, because right now the biggest hindrance for these companies is not necessarily capital or wherewithal or engineering, it's the actual sourcing of lithium and graphite and other things that are so important, which Alaska can really answer.
Good. Another question is, how do you assess risk related to permitting uncertainty and delays? Is there a need to accelerate those processes? Who wants to take
Yes,
that?
is the answer.
Yeah. Yes. No, I think, Kathy said it best when she was talking about sort of like the marriage of policy and investment need, right? And you have to have, authorities that are capable, willing, and autonomous enough to sort of create these policy changes that are necessary to get these projects done more quickly, right? Because again, as I said before, right, there's an immediate need, and there's a lot of factors that are delaying the meeting of that immediate need, right? One is technology, one is capital, but frankly, policy can be another one. And so I think that's something that needs to be openly discussed among the policymakers.
Yep. And I would just add on that, that's certainly an issue right now that is being considered by Congress. Whether or not they will be able to solve the issue remains to be seen. But it's so important to ensure that, yes, we are moving forward on a permitting front in a responsible way that takes consideration of local resources and communities and doesn't damage those, but at the same time has a limitation on time, because time is our enemy, especially when we think about investment, when we think about climate, all of those aspects. In order to capitalize on all of this, we have to move forward quickly. And so I think, to the extent that we can minimize permitting time, 15 years to site transmission is not doable. And we all know we need additional transmission, we need microgrids, we need everything. But if we can't get it permitted, this conversation is somewhat irrelevant.
I mean, I have 3 businesses: a CCS business, current of our portfolio, 3 businesses: a CCS business, a renewable development business, as Marcus was describing earlier stage, and a transmission grids business. They're all great businesses. Every one of them and their success really hangs upon permitting, simple as. And we are a situation in the lower 48 today, in the MISO North system, for example, where the interconnection queue for new assets is nearly 10 years. 10 years, people are talking about we need to do something by 2030 in terms of transforming the system. We can't even do the paperwork in 10 years. So that's just a real reality, which puts a huge amount of investment and value creation at risk, simply owing to just an enormous friction that exists in that respect.
Okay, I would say there is a strong consensus on that topic. Next question is, currently our Alaska renewable energy projects are relatively small, and global investors generally want to invest in large projects. How do we address this issue?
So I think, having looked at some projects in Alaska over the years, that is, right, one of the issues, right, is that you don't have, again, back to the conversations that I've had with a lot of the regional utilities, is that they have very specific needs and problems that they're trying to solve, right? In the south, around Juneau, they have avalanches that take out the transmission lines that are coming out of the high mountain lakes. In the north, they have black turbines so that they can keep them from freezing, right? These are issues that are very unique to certain areas of Alaska. They sort of make scalability from an institutional perspective more challenging, but at the same time, it's incumbent on all of us to figure out how to solve those challenges, right? To have the regional co-ops work together, to have more efficient transmission for institutional scale projects around Alaska, right? To be able to identify the location where the wind, which is location dependent, can be, and then how do you get the transmission to the load across different groups. So I think it is incumbent on all of us, right, to work together with the governor and the state to sort of figure out how do we sort of start to synthesize some of those things, right? What's great about Alaska is sort of the heritage of libertarianism, right? And the desire to sort of solve the problems on your own. But we really need to, right, people need to come to work together to create sort of the structure that is what's going to allow the institutional capital to come in and build that scalability.
Thank you. In the few minutes left, I would like to ask each of the panel members for their perspective on a more holistic basis, or because this is a panel of investors, where do they see value? Where do they see the most attractive opportunities in the next few years? By sector, by geography, it's pretty open question. Marcus, I will start with you.
Yeah, I think natural resources and metals and mining are the most interesting opportunity. Right now, I think the best way to play it is through companies because you get a mix of producing assets and development projects, or I could buy stock in Berkshire Hathaway and get access to what you're doing. But yeah, just the fundamentals in that area, or a couple years ago, I think it would have been oil and gas. Today, it would be metals and mining and resources broadly.
It certainly will be in high demand and a good area. Nick?
So it's sort of surprisingly simple. Operations, right? Operating. I mean, there's a massive amount of capital being devoted at developing wind and solar projects all over the world, but certainly in North America. And there's less of a desire for people just to operate those, right? So institutional capital, institutional partners that can just operate, right, these wind and solar farms over 20 to 30 years. So if we're looking at where we think the best opportunity is, it really is, taking these facilities and being able to operate them efficiently, very effectively, and sort of deliver on the promise of the developers and the development of it, and just make it run well.
Kathy?
Yeah, that is a perfect segue into what I would point. I mean, we're a little bit different as Berkshire Hathaway Energy than probably the rest of the panelists here, because we are operators. Our BHE Renewables group that does the non-regulated projects, they develop those, but they also operate those. They become part of the community. And I think that's where the opportunities lie, is where we are consistently looking for opportunities to advance safe, affordable, reliable electricity and related services. And I think if you look at the projects that we've done, with that almost $40 billion, that's exactly where our sweet spot is. We want to go in, we want to help communities, we want to be part of the community, and identify opportunities that maybe others would not be interested in.
Thank you. Michael?
Yeah, I think I take a little bit of a different approach and kind of pose a question back to the investor of what's your risk tolerance? Because I think that's going to justify where you are on the reward spectrum. And so I think there's a lot of different pockets of capital, and I think those looking for more stable, I don't want to lose any money, I have downside protection. Wind and solar obviously provide a significant, once it's developed, a significant, almost bond-like return. But that has come down significantly in terms of the returns that you're going to get investing in those today than where you were 10 years ago. So if you fast forward to today, what's the next wind and solar? I think that's the question that we are spending a lot of time on, thinking through about figuring out what the right technologies are in geothermal, in hydrogen, in ammonia, and through all these other energy transitions. I think depending on the market, as Frank said, is really important, making sure that you're investing in the right market and the right technology and matching those together. But there's the ability to invest at early stage technology and taking some risk there. There's the ability to invest at the project level where the technology's been proven out, but you now have to maybe handle some cost overruns or something of that sort. And then there's the fully stable one. So I think for me, energy transition allows for a wide breadth of investment portfolio, depending on what the appetite is for the investor. And I think thinking specifically to Alaska, the natural resource of Alaska really is where the investment makes the most sense. And that's, I think, as Marcus mentioned, metals and mining, and the other resource that Alaska has right now is untapped is gas. And I think those would be the two areas for Alaska where I see a lot of capital potentially coming in and being supportive, because that's the kind of market that this makes sense in terms of the demand and the supply.
Frank?
Yeah, I'd resonate a lot with what Michael said. I will say personally, I'm less excited about wind and solar now. I mean, I was a wind and solar developer at scale, and that was a great business, but now it's too easy. In a high interest rate environment, candidly, it's less attractive. I think the future, the next 10, 15 years, the real value unlock and the real opportunity to deploy really large capital with attractive returns is ultimately in bridging between clean power and industrial processes. And as Michael said, I think really the cutting edge of that is going to be in areas like fertilizer, cleaner fertilizer manufacturing, et cetera. That's an enormous existing business. It's a business where the economics of renewables coupling into that space today are getting really close to the envelope of the conventional solution. and it's a scalable business that provides a fungible, globally traded commodity with real deep markets. And crucially and most importantly, the United States is by far the most advantaged country in terms of the ability to deliver this. We have the resources, we have the scale, we have the existing infrastructure and cost effectiveness to deliver on this. There are markets around the world, Europe is a great example, really excited about their transition. They cannot compete with the United States in producing these products. And so I see those investors that wade into that space and scale it here in the States, and I think this Alaska project is just a real flagship example of what can be done, are going to crush it, candidly.
So I think that concluding on those words would be a way to conclude on a good note. So I'd like to ask you to join me in thanking the panel for a great discussion.